Good evening, ladies and gentlemen. A very warm welcome to you on Business Today Television in our ongoing series where we get you to meet the finest brains on the Lal Street. We are delighted to welcome Mr. Daljeet Singh Kohli. He's the head of equity at Roha Asset Management. Mr. Kohli is a very well-known stock picker on the Lal Street and has specialized himself into small and mid caps. Very warm welcome to you, Daljit ji. And as always, it's such a pleasure to host you. The markets are in fine shape after the numbers that have come in for the month of October in terms of GST revenue and all the changes that the government has made to many parts of the economy. How do you see sentiment on Dalal Street at this point of time?
Good afternoon, Shailendra. Thanks for having me on your show. See, we are actually very constructive on the market. And I think last 1.5 months back itself, we had written a note to our clients and reiterated that very recently also, that we believe that the Indian stock markets are poised for a very good time in next few months. Now, what are the reasons for that? Couple of important things to note. There is a confluence of 3-4 factors which is happening. So one is a very important factor is that there is a very clear defined thought process in all the regulator, policy makers everywhere that growth has to be given importance. Now for that, whatever is required to be done, we will do. Example of that we have seen from RBI. Rate cuts, aggressive rate cuts, liquidity, aggressively giving liquidity, and maintaining that tone that we are there to help you. So amidst this environment of uncertainty, when everybody is so fearful what is going to happen to the world, you have somebody talking about that we are there, we will support you, and we need growth. So that makes things very easy for the corporates and very easy for the economy to run. So that's very important sentiment factor. Plus, it is being followed with the actual action. The rate cuts have already happened. We have seen that. Tax cuts. The central government has given the tax cut from the budget. All that benefit is now coming. Now there are talks of the next pay commission coming in, which will also a lot of money to the hands of people. Then you have a benign environment on the weather part. Monsoon was good. So all these things, and then overall thing, if you see tariff impact, where market was too much worried, what will happen when tariff will come? The good part is that our entrepreneurs are so resilient, they understand things and they adapt to them. Either they would have done things preponing their shipments or trying to find an alternate market or trying to find an alternate way of doing the business through somewhere, some or the other thing. So the impact is that if you see when we were going into Q2 numbers, there was a lot of apprehension. There was a lot of apprehension. Q2 will be very bad. We might not see numbers will be degrowth and all of that. But actually, if you see, barring the top few companies, index level you might not see very big numbers. But if you see companies which are outside the index, they are all showing very strong numbers, 30-40% YOY growth with companies like Hitachi and all. Disclosure, we are not invested in any of these companies. Just an example. So they have 40%, GE, Vernova, etc. So this means that there is a broad-based recovery, there is a broad-based growth, and that is where we feel that consumption-related GST. We all know that yes, disturbance, 1.5 months disturbance of GST, but all that came with vengeance in last 8 days. Now we will see the benefit in November also and how things October and how things move up. So I think we are of course there are challenges. Market will always have challenges. ऐसा कभी होता ही मार्केट में कि चैलेंज ही नहीं होगा. आपको बाजार पूरा एक डायरेक्शन में मिलेगा तो फिर हम बबल में पहुंच जाएंगे. तो वो तो होना ही नहीं है. बट हमको ये देखना है चैलेंज के साथ में देयर आर सो मेनी अपॉर्चुनिटीज एंड वी very much inclined to that our understanding is second half of this financial year will be very good and small and mid cap companies will be big beneficiaries.
Uh, Daljit ji, the issue in the market is that the rally for 2025, whatever has come in over the last 2, 3 months or so, has been dominated by large caps. You have record highs on M&M, State Bank of India, L&T, Bharti Airtel, companies such as this, which are primarily absent from the portfolios of retail investors. Even you, as a very well-known stock picker, concentrate on mid caps and small caps. How do you see the market for mid and small caps, including your own portfolio, in the coming 12 to 18 months? Nobody has made any money or substantial money in 2025.
That is the nature of the beast, Shalendraji. So if you see, it will always happen like that. Whenever there is a lull of 1.5 years of underperformance of the overall market, first thing to move will be large cap, because that is the where people will have most credibility. They will see, okay, if I tell you who will come, where you will have more comfort, HDFC Bank or a City Union Bank. Obviously, you will say HDFC Bank मेरे को पसंद है, right? So first thing will be always large cap, but then it is followed by small and mid cap over a period of time. So it is only a matter of few months that lag effect is there. But good part is that once these smaller guys, once these mid companies, they start moving, then they jump so fast that they take over all of these guys. Because by nature of that product, the size is small. The movement of 10% in HDFC Bank or Reliance will be much difficult versus a movement of 50% in a very small cap company, right? So that is how it works. So it is only a few months here and there when these things happen. Important point to note is that we have to, as a portfolio, when we are making or constructing a portfolio, we have to keep in mind that business should deliver, and business should give that profitability which you are looking for. So if our aim is to look at 25% CAGR in profits over next 3 years.
Yes.
If that direction is clear, the timing issue will be taken care of. You for next 3 months, 6 months, your stock is not moving, but on one result or two results in 1 month, it will move 40%, 30%. So all that return which you were looking for in a year, you will get in 1.
I understand. The thing is that we have your top 5 holdings at the moment, and apart from Sharda Cropchem and one more, most of them are down between 30-35% from all-time highs. But you have made a lot of money over the last 5-7 years in the same stocks. So I understand that this is a wait period. यहाँ पर stock rests, and
Yes.
that happens all the time in the market. Okay. Now, I've asked this question to you before. Have you, added to your existing positions because of this downturn in the market? Or have you made any fresh purchases? What has been the way the portfolio has shaped up over the last 6 months or so?
So it is combination of both. So what happens is, like, for example, when we are owning a stock, we are staying with it for 3 years, 5 years. No. So if these 5 stocks that you are talking about, and you are talking about all-time high gap, for us, the purchase price was very, very low. They would have become 2x, 3x, 5x in this period of 5-7 years. So our entry point was definitely much better, and therefore, for us, this from the top to going down is immaterial. It's only a mathematical thing. But what we do, if it is still in the top 5, it means that any new comer in the portfolio will also get the same stock, because not be a wide difference between the two people. Although we don't follow a model portfolio approach, but if I like for a customer who was with me for 1 year back, and I like stock today, obviously it will go into the new customer also. So the addition of the stock remains whichever is there in that. Now, so what happens is, like, we have normally 25 to 30 stocks. Of that, 10-15 stocks will be continuation running, which will keep, which everybody would be getting continuously.
Correct.
And 5-10 stocks which will keep moving up and down here and there. So that is where we take tactical calls. So like in last 6 months, we have been quite bullish on consumption related sector. We had a small appliances company. We had a sari maker, distributor from Chennai. We had a car distributor, India's largest car distributor, Mercedes distributor. So those kind of companies we had added in our portfolio. Have actually played very well in the last 6-8 months. So like that, we keep adding new themes. Right now, we are looking at again some of the beaten down stocks. So in actually, we had added some BFSI space, some space we have added in chemicals, some pharma. So like that, we keep adding, looking for something in IT. As of now, not added, but looking for things.
Okay, you've given me the lead to the next question. What are you looking for in terms of IT? Number one, I think you are because you're a small and mid cap stock picker, so large caps though is out of question. So it's a small company. Now, is it a services oriented company? How do you look at it?
Yes, so for us, it is we are always looking for something unique in the company. What is going to change in that company? So, like for example, there is this IT company which has come off by almost 50-60% from its IPO time. Belongs to a very well known industrial house of the country, and they are into ER&D and doing a lot of work for aerospace, a lot of work for automotives and all that. Uh, Stock valuation has corrected. Industry has also shown a lot of resilience. So we are looking for that opportunity, whether from here onwards things are changing. And in an adverse environment, if the company has stayed put and done what it was supposed to do, in a good environment, what it will do. So
Correct.
that's where changes. That's what we are looking. So think niche kind of activities we are looking for. There are mid-cap IT companies. There is one mid-cap IT company which is oriented towards a lot of this travel and that vertical. So people had a lot of apprehension on that. And it used to be owned by PE fund. So there was a lot of selling there. They did some data center capex last time, cash flow issue. But that gave us an opportunity to enter at the right time. And that company had a fantastic result this quarter. So that's where we are looking for where is the change happening. And if that change is going to show up in numbers, how fast it can.
Ji. Kohli Sahab, a couple of questions on what you are completely avoiding. Obviously, you don't prefer large caps because they don't show 25% CAGR growth for 3 years in either profit or sales. So that is completely understandable. But what about the PSU space? There has been a dramatic improvement in valuations of PSU banks, in instance. NBFCs are doing amazingly well. Are they represented in Roha Asset Managers portfolio?
Yes, there are a couple of them, one or two. We normally, by nature, PSUs they cross that threshold of market cap. No, they will always be 50,000, 1 lakh crore kind of companies. No, even if they are not doing too much, but they are still that large market cap company. So they don't fall into our bracket or mandate. But we have, as a policy again, in our portfolio, we take 8 to 10% as large cap, 90% will be mid and small cap. So if there are one or two companies which fall into that bracket where growth is there, where mispriced opportunity is there, we take the call. So there is one housing finance company there. There is one power financier there. Those are the ones there.
Fair point. Of course, a view on probably gold and silver. कोहली साहब मतलब समझिए कि सारे फंड मैनेजर्स परेशान हैं, समझ में नहीं आ रहा क्या करें. मतलब एसेट कंपैरिजन करें तो ऐसा लगता है कि घर की गृहिणी ने बिल्कुल ही दोनों हाथ पीछे बांध के बहुत अच्छी तरीके से हराया है. अब यहां से कहां गोल्ड और सिल्वर?
देखिए गोल्ड में अभी इसमें कोई फंडामेंटल एनालिसिस आपके पास है नहीं, No? There is no way you can calculate the intrinsic value of gold. No? So how do you decide? It is basically on the basis of what central governments are doing, what inflation will be happening, what will be the trajectory of inflation, what uncertainties on trade happens. So when these are all sentiment issues, no? So you can't actually put them in a mathematical formula, right? So now I think 15 years ago, when somebody used to ask us gold, we would say always avoid, no? Because this is an asset which is a non-performing asset where you actually have to pay for keeping it safe. No, so you don't get any dividend, you don't do anything there. But because of all these external things, the store value of money and that inflation hedge that has played to its advantage. I think this uncertainty will continue for some invisible, I think, visible future if nobody says that this uncertainty is going away in any form. So when that happens, that means the sentiment will remain like this. So there is no reason for you to get out of it. But if you are fresh entering at this level, obviously the risk reward, you have to take care of that, because the what was at 100 rupees, if you enter at that, if you are entering at 150, obviously your return potential and expectation should go down. Yeah? So if you are now entering, you have to moderate your expectation. But if you are holding, obviously there is no reason, because the reasons for the jump or the reasons why there is a rally in this are, and they are not going to change.
Kohli Sahab, what has been your view of the quarterly earnings so far? Large caps have primarily dominated sentiment, and fantastic ones from SBI today, Maruti, L&T, even Bharti Airtel. These earnings have been phenomenal. Do you think there is a change in the sentiment as far as fund managers such as you are concerned?
Yes, that is what I mentioned in the initial remark also, that there is actually a big positive surprise here. And that is what many people were apprehensive that this quarter number, what will happen. This more important is, it's not important that 5-10% movement or that. More important is that this will probably give a hint that from here onwards, that earnings downgrade cycle will stop. No? From here, people will start talking of earnings upgrade for the full year. So, abhi, like FY26, FY27, 28 numbers, when people will start upgrading that, this will happen after 2-3 years of downgrade. So, that will be a good change. And that is what is going to drive the sentiment forward. So, this quarter numbers are really good. Now, only still the naysayers and skeptics will say whether there was this pre-buying due to tariff, whether there is this GST impact, how sustainable is that GST impact. तो दैट क्वेश्चंस विल ऑलवेज बी देयर नो, वो तो मार्केट में कभी खत्म ही नहीं होंगे. तो हमको मानना ये है कि जो ग्राउंड रियलिटी है, द वे consumption things have moved, the consumer durables, the cars, the sales have happened. It's not that after 8 days people will stop buying. No? तो ऐसा नहीं होगा. मुझे जीएसटी का बेनिफिट विल बी देयर, एंड रेट्स, इंटरेस्ट रेट, लोअर इंटरेस्ट रेट साइकिल विल आल्सो हेल्प. So we assume that from here onwards, earning cycle will move upwards.
Correct. I think that has been a missing link as far as the market is concerned. The government has done all it can by changing interest rates, improving liquidity, and cutting costs of major items of purchase. Now we need an earnings upgrade, and as Kohli Saab is rightly saying, that is in the pipeline over the next 2 or 3 quarters. Uh, Very good macro and improving micro, Kohli Saab. Any other, worry that you have that might derail this optimism in the market?
No, the biggest worry is the trade issues. No, they will keep coming in again and again, and unfortunately, they are dependent on one man's fancy. So we cannot do anything. If that person thinks of something new, then you have to bear that. But I think slowly markets will start ignoring that and understanding that, okay, how does it finally what is the outcome and finally how things will improve, move on for after this turmoil, initial turmoil. The market will start looking at that, but yes, it will always have an impact, and nothing stops. No, see, if you have that power, and tomorrow you decide that instead of 50%, I will charge you 100%. Who will stop you? For you, that 100, that's just a word, but for the business, it is a total from profit to loss. So obviously there will be an impact. And that is unfortunate thing is that you can't do much about it. You can't hedge against it. If by just thinking about that you remain out of the market, then you lose the opportunity. If you don't take any risk, obviously there will be no return. But you can, what best you can do is monitor it continuously, size the position sizing is very important, and take that much risk which you, in case worst scenario happens, how does it impact your portfolio? That's what we are doing.
Okay. Kohli sir, my final question to you. What is the position of cash in Roha Asset Management as a percentage of overall AUM? Has it decreased in the last 3 months, or has it moved up?
This is very interesting, Shailendra. You should know this, that this is probably the unique about Roha. We don't take any cash call. For us, cash is an outcome, not a position.
Okay.
So what happens is, why do we not take? That is unique. We believe that taking a cash call means you have to be right 2 times. At the time when you are taking out the cash, after that market should fall. And once you start deploying the cash, market should start moving up. So you have to be lucky 2 times. So that we don't want to take that chance. And that is why we say we are happy with remaining invested. Because of the outcome of transactions here and there, 1 or 2% cash can be generated, but that is an outcome, but not a position.
Kohli sahab, always it's very interesting to talk to you. And thank you so much for your time. कभी दिल्ली आए तो मौका दीजिए, ऑफिस तशरीफ लाइए, बढ़िया तरीके से बात करेंगे और चर्चा करेंगे बाजार पर. Thank you for your time and have a nice day.
Thank you very much. Thank you.